Afternoon and welcome to the latest Finance Connect webcast sponsored by NETSOL Technologies. My name is Edward Peck and I'm the founder of Finance Connect. This session is titled SME Finance, What Needs to Change to Create Better Outcomes for SMEs, Brokers and Lenders. Why do we want to talk about this? Well, the SME lending market is at a pivotal moment and the potential prize is rather large. The government needs UK PLC to grow. SMEs can make that happen fast if they have the funding to turn their ideas into economic growth. The government knows this and is actively assembling the building blocks to increase both the appetite of lenders to lend, in part by reducing the risk they face when lending, and the appetite of SMEs to borrow. But SME lending isn't easy. The market is complex, it's expensive to deal with, it comes with significant risk. And here's the thing, the commercial lending industry has already built a machine that does this lending job, and it does it rather well. Brokers are brilliant at getting deals done. Lenders have built efficient lending machines with great tech and the ability to lend against a story even. They understand risk and how to manage it better than anyone. Technology has made transactions faster and simpler than ever before. So the finance industry's machine has been built by talented, driven people, but in building it, they've been forced to make difficult trade-offs to deliver the service cheaply and effectively. And with those trade-offs comes the possibility that the industry's very efficiency may sometimes produce outcomes that don't match its good intentions. Because the trick is not just to increase lending. Anyone can do that if they have the cash and a matching risk appetite. The real trick is to increase lending in a way that also creates great outcomes for SMEs, sustainable profits for the ecosystem which serves them. It's Finance Connect's view, in Finance Connect's view, we believe if there are problems to be fixed in this marketplace, and the case hasn't been properly made just yet, not in the instance, for example, of loan stacking. It's us, the industry, that are best placed to identify those problems and fix them better than anyone in government, although we should certainly seek to find ways to collaborate with them to effect any changes we need to make. But the key point is that industry needs to lead the change. And if it doesn't, the danger is that others will step in with less knowledge and less care for the lending machine that's been so carefully built. That's the context for today's discussion. Does the panel believe there's a problem? And if they do, what do they think is causing it? And what can be done to fix it? Okay, before we start, I have a plea to make to you, the audience. My plea is not just to be an audience. Webcasts like this succeed or fail on one thing, whether the ideas stay fresh and relevant to the people listening, whether they hear the things that are new or just trotting out the old truisms. Our panel will bring fantastic insight, I have no doubt, but the best discussions happen when the audience joins the conversation and doesn't just sit and listen. So please use the questions and answers box throughout. Ask difficult questions, challenge what you're hearing, add your own experience. Lisa Laverick, Finance Connect's managing editor, is here alongside me, sorting your contributions and injecting them into the flow. The more you engage, the better this session will be. Okay, let's introduce the panel. Paul Goodman. Paul is a broker and CDFI founder who's been championing fairer SME finance. Paul, I want to give you 30 seconds to tell us a little bit about yourself.
Thanks, Edward, and good afternoon, everybody. I'm Paul Goodman. I've spent the last 2 decades working in SME finance as a broker and as an advisor. I've also previously served as chair of the NACFB. Increasing my work today focuses on helping viable but I guess distressed SMEs restructure, access capital in a way that actually strengthens their long-term position. Increasingly, I've become interested in the system level of design of SME finance, how incentives and sequencing transparency shape outcomes for business over time, and what would need to change for the ecosystem to be, I guess, more durable and fair over time?
Thank you, Paul. Steve Bolton. Steve is a lender who no doubt sees the commercial realities, sees and understands the commercial realities of serving SMEs. Steve, same thing. Do you want to introduce yourself in 30 or so seconds?
Thanks. Yeah. Afternoon, everybody. I've spent the last 5 years at Peak Solutions, a private credit-owned non-bank lender. And prior to that, I was with Barclays for 20 years. And it was the Barclays business when it was sold to private credit that saw me make that move. So I've seen both the bank and the non-bank fairly deeply. And certainly over the last 5 years, we've all seen a great deal of change. And I've had to navigate that as part of a non-bank financial institution. That's me in a nutshell.
Thank you, Steve. So Jason, last but not least, Jason Hurwitz. Jason is an interesting combination. He's a technologist who also has a lending background. And we're going to be pushing on whether he's building tools that could change how the market works. So Jason, as a technologist, you only have 36 seconds to introduce yourself. But as the representative of our sponsor, NETSOL, please take as long as you like. And don't forget to tell us why NETSOL are the best at helping the industry solve these problems. Off you go, Jason.
Yeah, I shouldn't need more than seconds. I've had the great privilege of being dedicated to the SME lending space for the last 20 or so years, including having been an SME founder myself with a range of asset finance contracts that helped me scale and grow that business. And then was helping with strategy, growth and transformation at Close Brothers. And again, at Aldermore, we work very, very closely with the broker channel. And now with, as you say, with NETSOL. And NETSOL, amongst other things, are very focused on helping many operators in the SME lending economy to transform and set themselves up for scalability and growth, whether that be brokers and lenders and dealers. And we provide tech throughout that journey. But I won't be focusing solely on technology only in this discussion, having worked very closely on SME strategy in the banks that I worked with for many years.
Fantastic. Thank you, Jason. Lisa, let's kick off the first poll.
So the first poll question is, what is the biggest barrier to better outcomes in SME lending? Speed and simplicity are prioritised over suitability. Brokers lack the tools and incentives to look beyond the immediate deal. Lenders can't make the economics work on complex small ticket lending. And finally, SMEs don't understand their options and default to the easiest product. So please make your choice.
So it's an interesting poll because it really asks you to choose. Is it the SMEs who don't know what they're doing? Is it the lenders who can't make the economics work? Is it the brokers who haven't been given the tools and are being rewarded in the wrong way? Or is it some combination of all of those? So speed and simplicity are prioritized over suitability. I can see that that's something that customers might want, that lenders might want, and that brokers might want, but might be creating the very bad outcomes that we're all thinking about. So, okay, Paul, let's start with you. You described in our many prep calls that the current SME finance market is optimized for that speed and volume rather than outcomes. But before we get into all that, I just wondered, as I was talking about what the industry does well, do you agree with all that? What does the industry do well?
Yeah, I mean, it's a great question. You go back to, I set up Goodman Corporate in 2006, so some 20 years ago, and the SME finance market has definitely significantly improved, and I guess never more so than over the last decade. Speed of decisioning, access to capital, product diversity. It's these are all materially better. 10 years ago, which seems to have gone in the blink of an eye, but SMEs simply didn't have the options that they've got today, and that's even more so if you go back, pre-2008, pre the credit crash. So, in terms of what the market does well, the diversity, the access to capital, speed, and availability, I think is has massively improved. So for SMEs, I think the finance market has done a great job, but availability is not the same as health, and I think that's where.
Okay, so where does it all go? Where is it going wrong, if it's going wrong at all? You talked a little bit about loan stacking, and maybe you can describe what you're seeing there. I know that that's what you see as an example of what's going wrong.
Yeah. I mean, I think as we've already touched on, and the poll obviously touched on that as well, is that increasingly we're seeing a system that's optimised for speed and transaction volume rather than long-term outcomes. And individually, rational behaviour, by brokers, lenders, and platforms, it is producing collectively fragile outcomes for SMEs. And that's not necessarily about bad actors. It's about system design. You mentioned obviously about the loan stacking. Increasingly, I and some of my industry peers, we're seeing SMEs with 6, 7, sometimes even more than 10 concurrent facilities. I've seen examples of, in some cases, that the SMEs are paying £80,000 to £90,000 a month purely in interest servicing. And in each of those facilities, absolutely, it solves it would have solved a short-term problem. But from what I'm seeing, none of it are kind of they're not addressing the underlying cash flow structure. There's a sacrifice somewhere in the system in terms of speed. That loan stacking individually, you can see the rationale behind it, but I think it's that long-term damage that's potentially doing.
So what you're really suggesting is that the industry is optimized to make a transaction happen very quickly, and maybe you also said before that it rewards that transaction happening, but nobody's really got responsibility for the longer term outcome, so that they'll optimize on speed, on certainty, but forget nobody is taking any responsibility for the end result of all that.
I wouldn't necessarily say nobody. Again, it's not necessarily about bad actors. It's about the sequencing. I think we discussed before about the SME that's realised that they haven't got enough money to pay payroll on the Friday at the end of the month. It may well be that an emergency loan is absolutely appropriate for that, but that should be the first step in a structured sequence. It's
got it.
Why has that business, right? Why has it not got the working capital? What's behind that? Would receivables finance, some asset-based support, or working with their accountant or something? What's creating that? Because then that will bump onto perhaps the next month. It's not been fixed, and that's I think where the stacking comes. So it's
okay. So Steve, do you recognise this? So I'm so sorry, Steve. Do you recognise this picture from a lender's perspective? Do you think the market's set up to produce good long-term outcomes, or is it just focused on transactions?
I think it is a bit of both, but there's no question. First of all, the industry has done a great job in delivering a rapid service for customers, and SMEs in particular don't have time. That's one of their most precious commodities. So delivering solutions quickly, there's no question that's important, but there is a compromise for a lender here, and a very simple argument to cite very recently in our own business is a message back from sales, and that's understandably where the messages will come from, that we're asking to do one extra check than somebody else may be doing. And if we remove that extra check, we'd be able to move quicker and we'd be able to write more business. Now, we shouldn't just remove that check in order to be faster, because there's a reason that check was put in place in the first instance. We need to go back and understand why that is. Is there an inherent risk that is managed by that extra check, or have circumstances changed? Is there a reason why actually we could change that? But you can't just do these things on a whim. They're there for a reason, and you need to think that through properly. Otherwise, in the long term, it will come back to bite you. And I think increasingly, the definition of long term is becoming short term, because we are clearly, as an industry, AI is democratizing technology, which means that bad actors are going to find it much, much easier to work their way around the industry to find the people, to find the lenders who've got the weak spots that they can then exploit. And actually optimizing for speed actually gives them more of an opportunity to do that. So we need to be very mindful of that as well.
Well, it's really interesting, because I was going to ask you, are we fixing the right problem here? Should we be worrying about the focus on the speed of the transaction, or should we be worrying about a few bad actors who need to be policed? And what I think you're saying is, actually, we need to do both. We need to build a great culture that realizes that doing the transaction is not just doing the transaction fast is not enough. We need to do more than that. We need to make sure that the long-term outcome is good. And by not doing that, we allow the bad actors to play. That's what you're saying?
Absolutely. But it is important that if we're talking about SME, where we know broker in the asset finance and leasing market in particular has played an absolutely key role particularly since the financial crisis in making cash capital available to SMEs. We really need both the broker and the lender community to be as aligned as we possibly can. And I think everybody's got a part to play in that. Broker, lender, providers of technology. And there's no question, just as technology can be exploited by bad actors, as an industry, we can also collaborate better together, I think, to deal with those bad actors. But we can't ignore them altogether.
Okay, so when we had our chat before, you talked a little bit about capital pressures. That's Basel III, making small ticket lending uneconomic for banks. And one of the things I think you suggested, or I may have suggested to you, I can't remember, that economics don't really work for loans under 150 to 250k for many lenders. Just wondered if you wanted to say something about that.
Yeah, look, apologies if that's an arbitrary range of numbers, but every financial institution will have its own economic challenges, whether that's Basel III, whether it's 3.1 makes the difference for them or not. The reality is, post the financial crisis, certainly for the too big to fail banks, the ring fencing that was put in, arguably in haste at the time, did result in SMEs being pigeonholed and being put in a position where, never before were so many SMEs managed by so few bank managers, relationship managers. And the banks, and understandably so, had to rely on technology to be able to service. A little bit like the investment world. If you've got between £1,000 and £10,000 to invest, then you've got the app. That's all you've got. If you've got more than £1 million to invest, then probably someone will come round to your house and have a cup of tea with you and direct you. But if you're in between, and a lot of SMEs are in that in-between space where they're not all vanilla structures, they're not all simple ownership structures, and they need more than, unfortunately, those too big to fail banks were able to provide immediately after the financial crisis. But I think moving through, that clearly became a cost pressure for serving those SMEs. And that was one of the things that led to the rise of the broker, because they've put the shoe leather out there. They've taken the risk of putting the front end of the origination out into the market, which is, unfortunately, like it or not, every bit as important as making sure that the customer pays you back over time as well, in order for you to have a complete solution. So I think there's quite a lot in there to pick at for businesses, for banks to navigate their way through. And I think the other thing is, the challenger banks have clearly also tried very hard in this space, but arguably here we are all these years on, and it's still tough for challenger banks to get a meaningful foothold in the market. It was still dominated by the big banks, and they may be less so now, given that their balance sheets are strengthened. But again, the banks faced the challenge of having to think about the cost implications of servicing all of these customers. And that meant inevitably they focused on their own customers. So customers where they had a broader range of products that could support what, when they looked at the asset finance and leasing space in particular, was an area that has seen quite a lot of margin compression over time as well. So they're trying to juggle all of those things, not easy, but clearly a key part of this is making sure that the collaboration is right between lender and broker in order to get the right outcome for customers.
Okay, we're running slightly over. That was a really interesting, comprehensive answer. So thank you for that. Can I move on to Jason? From a technology perspective, are the systems that brokers and lenders are using today designed to support this transaction? Have we built our technology to be a transaction engine rather than a driver of relationships?
Short answer and a long answer. Short answer is yes, but why? Why have we done that? It's because the operating models of the businesses where there is technology are set up for exactly that. So we've been there to achieve the strategic outcomes of that. So just rolling back the clock a little bit to post-credit crisis, there was, I think, to echo the others' comments, there's been excellent progress on across the industry, both in intermediary and in lenders, in meeting needs of SMEs, but they are on the downside, where we haven't really made any progress as an industry, is looking at needs holistically. We're all set up in all different corners to serve and be specialized in delivering on individual needs, whether it be commercial equipment or invoice finance or business loans. The industry is still very siloed. Now, SMEs in the main don't come to the market saying, I want asset finance. They come to the market saying, I want to grow for this business plan, or I need to buy this thing or invest in something else. And then they find their way to asset finance in the main. So I think whilst we have done an excellent job of making the process of accessing things like asset finance easier, better, faster, and there's a long way still to go because it's still fairly complicated, we haven't really made any progress on saying, okay, Mr. or Mrs. SME, what is it you really need? What are you trying to achieve? And let's make sure we find the right product for you or the right channel for you. That there isn't that holistic view to help SMEs and to guide them through the process of seeking funding to support their plans. And that's something I think there's a lot of work still to be done on. So the technology for sure is geared up behind single transactions, but only because the business models and the strategies of the operators in the market are also focused on that. And the technology can be adapted quite easily to look more comprehensively at SME needs.
Okay, great. There are loads of questions coming in. I just thought maybe, you've all heard each other speak. Are there any points that you want to make to each other on any of the stuff that you've said so far? Okay, so let's move.
Yes.
Go on.
Sure. I mean, I'll go for a question. So Steve, not so much at Peak, but in your Barclays days, you had the benefit of banking the clients that you had, and having a broader view of their health and their needs, and being able to sort of deploy more than one product to an SME. And that's still largely the privilege of the clearing banks, save one or two exceptions. But do you remember those days in terms of and how that works, and do you reflect on that on what could be done today to achieve that kind of service for SMEs?
Yes, because a large bank like Barclays had central services that pulled together data, for example, in some pretty clever ways. So you didn't just look at a Moody's rating, for example. You could also look at a peer rating. So you could see how within a specific vertical that customer was performing against other customers in that same vertical, in that same geography. You could slice and dice it how you wanted to do that. And increasingly, and I know that kind of technology, that information is still available at Barclays, and in many instances, they're able to do quite detailed analysis done on the other side of the planet at relatively low cost to give insight to relationship managers around what they should and shouldn't be doing, what products are appropriate. And I'm quite sure, since my time at Barclays, AI is being now used to help direct and suggest as to a course of action with a specific client. But we're here talking about SMEs, and I think the issue sort of comes back to the point I made earlier around too many customers, not enough managers. So where is that insight now being used? And I'd argue it would be really helpful as an industry if we had the ability to draw on that kind of information and that kind of insight in a way that levels the playing field, and also allows us to make far more informed and better informed lending decisions as well. Because I think somebody referenced earlier, storybook lending has probably been on the rise as a result of what went on immediately after the financial crisis. But at the same time, that's expensive to do again. So technology and insights got to be key in supporting the right outcomes for that cohort of customers.
Paul,
but I do miss
that
technology.
I think I'm again all interesting points. I'm working on I live in a suburb of Nottingham. I'm working on a regeneration of the high street. And around the high street, there's 752 SMEs. All different types of businesses, not just retail, etc. And the biggest thing that's coming from that is they've got nobody to talk to. They have nobody to talk to. And there is. I guess it's quite an old demographic here in my local town, but there is definitely a need for people to speak, and I guess technology plays a part in that, in terms of if I can use technology to get more through the system, it'll give me more time to actually go and touch and put those boots on the ground and speak to those SMEs. So I think technology's got a part to play, but I think the SME market at the moment still misses that void left by the banks. Not having those boots on the ground from a manager's point of view.
Okay,
yeah. There's a question there, but if we can pick it up from Steve Farrago, which is
Yep. Go on.
Yeah,
what
just one there from Steve Farrago relevant to it that says, how do we get more finance doctors to look at the health of SMEs? And I think that's what Paul was pointing to, is who can go out and talk to SMEs about what they're doing and what they need? Because the whole industry is set up to serve single needs really, really well, including brokers who do an excellent job within a specialised niche. Yeah.
That's a great segue into the next section, which is really about what would better look like, and clearly one of the answer is getting more finance doctors into the to look at the health of the SME. Lisa, do you want to give us the results of the poll, and then we can get into that bit of the topic?
Yes. So, what's the biggest barrier to better outcomes in SME lending? And the audience have put SMEs don't understand their options and default to the easiest product. That's top with 48.2%. Then you've got lenders can't make the economics work on complex small ticket lending, 23%. And then speed and simplicity are prioritised over suitability, 21%. And finally, brokers lack the tools and incentives is 7.1%.
So it suggests that if SMEs don't understand their options and default to the easiest product, that a large part of the remedy is educating SMEs about finance products, or making the finance products simpler so that the SMEs don't need to work hard to understand them. What are your thoughts about that, Steve?
Well, I think that wasn't the answer I gave, but but looking at it, I am swayed, having for now, and I've thought about it a little bit. I think it's maybe it just comes back to that point I made earlier. SMEs they're when they want to grow and they need capital to grow, they need to be able to access it easily. They don't have time. And if the answer is that they're ignorant of the options, well, maybe they're going to remain ignorant of the options because they don't have time to weigh them up. And the obligation is on those of us in a position who do speak to them. So it'll be either a direct sales relationship or it'll be a broker, to make sure that they do get the options in front of them. I was just looking at some of the notes in the sidebar that people are talking about, and Juliet Propel makes the point around the extent now to which digital lending is playing into this space. But that sort of presupposes the SME knows what they're doing and understands what they want. Mm-hmm. And the answer to that we've just given to the previous poll suggests maybe that's a misplaced confidence.
Yeah, and Lisa, I agree with that. I've got an example just last week. I've got a business that is absolutely perfect for invoice finance, but they're adamant they need a loan. Well, a loan would help them today, but they want to go from 300,000 turnover to 3 million to 10. So, a £75,000 loan is going to help them in the short term, but it needs that kind of revolving facility to help to provide the headroom, the working capital. But all they've seen is a loan. They're relatively new to the market, so they probably wouldn't have come across an overdraft. But what they've seen and what they're bombarded with is a loan. But it might fix that today, but it won't see them through for the next 6 months, 12 months. It won't see them on that growth plan, and I think it comes back to that understanding, the SME understanding, which is long talked about. It's about education, but whose that education? Whose is that responsibility?
Fantastic, Lisa. We must move on. Launch the poll before anybody says anything new.
So poll 2: what would you do most to improve long-term outcomes for SMEs? A, brokers evolving from transaction processes to financial guides, technology that identifies what an SME actually needs, not just what's quickest. CDFIs and relationship lenders playing a bigger role as stepping stones. Open banking giving brokers and lenders the data to see the full picture, or more financial education for SMEs. So please pick now.
Thank you, Lisa. The brokers evolving from transaction processes to financial guides should be financial advisors. So I don't know why that word got changed, but there we are. Paul, you've talked about moving from point-in-time credit to journey-based finance. Do you want to paint the picture? What does that look like in practice for an SME who's run out of cash to pay wages on Friday? Take us through it.
I think it's. I think as I said earlier, in that instance, that short-term loan, might be the most appropriate, but it's that SME understanding why they're run out of cash. Have they got some debtors who are late paying? Has the turnover dropped? Has the turnover grown? Has the turnover grown rapidly? There's a number of factors in there, and in terms of that, you look at the journey in terms of the ecosystem that sits at the moment. For an SME that's starting out, you've got the British Business Bank Startup Loan Programme, which obviously has been a huge success and is evolved and is there for the foreseeable. But if you speak to any of the startup loans, any of the launch events, their biggest challenge, or 95% of them will say their next challenge, is growth finance. But obviously there's a big gap for a business that started trying to get to the high street. And even as we know, the high street's obviously not the dominant funding now, but to get to a challenger bank, you still need a good 18 months, 2 years, 3 years of trading to be able to get to that next phase. I think that's where the CDFIs, certainly play a part. CDFI, most people I speak to still have not heard of a CDFI, don't know they exist. They are getting a lot more coverage now. The previous Small Business Minister, Gareth Thomas, started the process in the House of Commons in terms of raising the bill. Lloyds have put money in there, and I think there'll be more money that's available to those community funders. And again, they're a stepping stone. It's part of that journey to get to more mainstream. So I think there's enough opportunity, but it comes back to the point that nobody knows that, not everybody knows that the startup program exists. Not everybody knows who a CDFI. I think it's fair to say, compared to in the US, where I think last year £83 billion was lent through community funders. In the UK, on the commercial side, it was just in excess of 103 million, I think it was. Funding gap somewhere between 1.6 and 3.2 billion in that very small SME space. So it's about that journey. It's about the broker's role, the lender's role. It's how that all comes together, because a broker might not know what a CFI is. Some will. A broker might specialise in asset finance, won't know about invoice finance or trade finance, so there's a lot to unpick in there. There's a lot.
So how does all this process work? Because I think what you said before is that again, in our conversation before the call, brokers are excellent one-trick ponies, came out of product silos in the banks. And that sort of underpins a lot of the problems that I thought we were facing in this. Actually, some of it's coming out around simpler products and better education. And I hadn't expected the conversation to go as hard in that direction. But how do you see us moving from brokers as one-trick ponies who'll sell the product that they sell to the customer who comes to them, rather than advises them to go into a particular...
It's a difficult one.
Just jumping in there, I think that's where the market does need to evolve. I know the NACFB is working with some education processes, and obviously providing those tools and those education processes to widen a broker's knowledge, because from my point of view, when I walk into a client, I've got that full spectrum of the commercial finance, and it makes a massive difference when you're speaking to an SME. I think if I was an asset finance broker and that was what I really excelled at, then I'd be uncomfortable. Because who would you go to? If you think that, well, actually it needs something beyond that, where'd you go to? And I think that's one of us made the point earlier about collaboration, and it's how we fix that.
Steve, you made an interesting point before when we talked about this challenge of advising the customer properly, and you talked about the data gap banks have, and you talked about the advantage that banks have in insight into sector performance by region, business ratings against competitors. It's all powerful stuff that nobody else has. And is that knowledge a missing piece still? And does all the stuff that's happening right now on open banking start to close the gap on the sort of data gap?
Yes, I think it does, and I suspect technology will come along and AI will play a big part in helping close that gap as well. But you can still see what a challenge it is to get an asset finance broker to contemplate another product line, because focus is, again, so important. Many of the brokers are SMEs themselves. So, again, time is very precious. They may know somebody around the corner they can put you in touch with if you need a commercial mortgage. And it may be that the commercial mortgage broker is just a commercial mortgage specialist. But I think technology can certainly play a role in drawing business service providers, brokers, to help them collaborate. But I'm still seeing a very big gap between the traditional bank manager informed by all that insight with a long-term knowledge of the customer in the same way as a broker has, and the broker who is looking at a one-off transaction for a period of time, and therefore, sort of by definition, a short-term view of that customer.
So who's best placed to provide that capability, that advice capability? Is it? I mean, we talk about the brokers being the bank manager of the future, but is that realistic? Is that what's actually going to? I
don't know if that's realistic. That's one possibility. The other is the challenger banks. We don't want, nobody wants really just 4 big banks on the high street. Ring fence banking didn't really, might have fixed too big to fail, but it hasn't, and other regulation has not helped the other challenger banks develop their books and their product offerings, and many of them are still caught in this focus of they have to grow, they've got their own pressures that they're under. A key metric for them is customer numbers. Asset finance product is a great way of increasing your customer numbers. There's a story to tell to investors then in terms of in time we'll be able to cross-sell. So, maybe there is something there that over time, the challenger banks will properly do what back in the day Captain Mannering used to do.
Okay, poor old Captain Mannering. Paul, what's your thought on this?
Edward, can I jump in, Edward, if that's all right?
Go on.
Can I jump in there, Edward? Is that all right?
Yes, do.
Yeah, please. Thank you. Yeah, I mean, we could. It's very easy to think of SMEs as a homogenous group, and there's wild variety in their financial understanding and savviness, particularly when it comes to finance. From a micro SME who dual hats and operates to a medium-sized SME with a CFO and a finance team who's very, very laser focused on interest rates and margins. I think what brokers are excellent at doing is providing an expert service to SMEs in specific segments for specific needs, because SMEs come to the market and there's a huge amount of anxiety they have in trying to access funding. They may be in a distressed situation, or they may be looking to take the next big step and putting their homes and businesses on the line to do that, with PGs and DGs. So that we've got to understand that the psyche of the SME is an extreme amount of worry. And brokers have and direct sales forces have the ability to wrap around a customer to say, no, I can help you on this. But even then, even with that knowledge and empathy in specific segments of the market and in demonstrating industry knowledge, they're still serving one need. They're still not looking more broadly at what the SME might need. And let's be really clear, from a regulatory perspective, they are not permitted to do an advised sale. Brokers nor lenders direct sales force. They're there to sort of provide good options for a specific need, rather than go holistically and say, what do you need? And there are very, very few operators out there that do that. And I think there's a real gap in the market for brokers that can be cross-product. But it is hard, because brokers need to provide confidence to their customers, and they have high degrees of confidence in their silos and less confidence outside of their silos. And that becomes a real challenge.
So Jason, let's think a little bit about this, the tech opportunity in this too. There's the AI, and you've told me that you've assessed the practicality of building an AI architecture that can look at an SME and work out what lending it actually needs. And Christian Roloff has posted in the chat, what of the data Steve is referring to, do we actually have access to it? If we just record and analyze what we're doing and then look back at it, how much of this information do we actually get? What's your view on this thing? Are we sitting on all this data that means that the AI and data and the data that we've got comes together beautifully to feasibly solve this problem of telling the broker or whoever it might be what the products are that the SME needs?
I think there's one sense, there's an altruistic sense of what capability could help signpost SMEs to the right product, to the right solution, to the right provider. And then there's a profitable entity itself of how does a multi-product bank make sure they can provide as much of their products to help SMEs in a range of different needs. Now, altruistically, AI is perfectly placed to help an SME at any time of the day in non-technical language, go through a needs analysis to say, what are you trying to achieve? What is your business problem? What are you trying to access? And then help go through a whole series of very nicely toned questions that are tailored to SMEs and not overly complicated, to direct them to the right lending product via the right channel that suits their needs. So maybe direct them to brokers to say, you need to go and talk to someone who can explain this product a bit more and give you that, or direct to a lender, or to Julie's point, if they're super confident and the needs analysis qualifies that, they can go and make an online application directly on a via digital direct, if that's the right solution for the confidence of that customer. Because AI is perfectly placed to do that. But where does it sit? because that's an altruistic question you're asking an SME there. So that can't sit within a monoline funder who's only got one product. You can't go through a needs tree, and every which way you go on the tree ends up as asset finance. That's not quite right. So you've got to have, it's got to sit somewhere, either in a full multi-product lender or in a public body.
But looking at how the industry might change, in future to make itself a better fit, can you see a commercial solution for lenders and brokers that might do this job more efficiently and effectively through technology? For example, connecting lenders of different types and seamlessly handing off deals to the right product in some way.
If I can jump in there, Edward,
please do.
Because I think it was on the pre-calls. So I'm no tech expert, but I've built an AI system that you feed in the information in terms of the scenario, and it'll run through 12 different lending archetypes in terms of asset, invoice, property, bridging, etc. And it will give me an outcome in terms of number 1 is invoice finance, number 2 is a cash flow loan, number 3 bridging, etc. It'll go through that. I've built that. It's got over 300 lenders in there. So, but it doesn't necessarily name the lenders. It actually teaches you in terms of the type. So we use it here for training. So I think technology can, if I can do it from the corner of my desk, I believe technology can do that.
Paul, I agree, Paul. I think the question is not can it, is where should it sit?
Yeah.
Where should that kind of service sit? Should it sit in a public body, a BBB, or something that's publicly available, that's agnostic to any particular lender, and then routes you from there? Or should it be a private enterprise that's providing that service to SMEs?
I think it's got to sit broker side, because if it goes into a public body, it's always going to come down to who's giving the advice. So the great thing that I've learned on this journey with AI, it doesn't get it right every time. So I think you'd be very hard pushed as an 18-year-old coming out of school or college or whatever, and being a computer whiz kid and creating something, because it might point to a particular architect or a particular lender, but the broker knows that actually that lender is a bit of a name and a number, and actually it needs more of a storyboard lender, and that's where the broker comes into his own. And I think that's where the trade-off. So I think it sits with the broker community, because the broker can then put their own slant on it, because they know the market. The brokers are good at what they do. They know their market. They understand the SMEs, and I think if the AI or that kind of technology can help support them, support better outcomes and longer term outcomes for SMEs, I think that's a great starting point.
Will that end up looking like checker trade?
What about accountants? Steve Farrago is asking. Are they? I asked this question in the receivables area, whether accountants were still able to give that level of advice, and I'm told that the nature of the relationship between accountants and SMEs is different. But are they the people who are best set up to provide this advice rather than digital?
I'm an accountant by trade. I wouldn't go and tell a client how to do their accountants, because it's not what I do day in, day out. And in the days where, I still come across accountants that think that invoice finance is a lender of last resort. So I would say that they're not absolutely great at the compliance and being ahead in the tax planning. I'm not saying there aren't some good accountants that can provide that kind of support, because they've got corporate finance departments, but I think it's brokers. Accountants are good at what they do. Brokers are good at what they do. They should each stick to the knitting, but collaborate. So if there is a capital need, let the accountant tell you why that's happening, or what the cash call is going to be in 12 months' time.
Well, perhaps if the AI solution sits with the accountant, you're not asking the accountant to do it, so to speak. It sits there, and then it routes to the broker or the lender direct, depending on the needs analysis.
Yeah.
Okay, I'm going to move it along a little bit. Is there anything any of you want to say to each other before I move into the? Okay, well we've sort of whisked along what the problem is, and we've whisked through what the solutions might be, and then I want to get to what the next steps are, but I don't want to move the conversation if you've got a burning desire to say anything extra on this before I move on. Any of you three?
For me.
Nope.
Okay, so Lisa, before, I'm sorry, did somebody want to say something? No, I don't think so. Okay, so before we move on, I just wanted to note something that Richard Houston said. There was an FCA tech event on open finance yesterday. Richard is our AI advisor, and he's sitting in the audience. The most interesting idea that came out of that was the idea of SMEs having their own data wallet that makes it easier to share their financial data with brokers and lenders to allow them to find better finance options and secure them more quickly and easily. What, he asked, do the panel think of the potential for something like this? He says, brackets, noting, of course, that open finance is quite a long way off with still a lot of hurdles. So I don't know if one of you wants to pick that up really quickly, because we're at 9 minutes to do the last section.
I can, if that's okay. I think it's a question of, can you get the data, and then who is incentivized and set up to do something about it and help? So what Richard speaks to very eloquently there is, could we present this information to people? But are organizations set up and incentivized and organizationally structured to serve multiple needs? No, they're not. So there's a wider thing to be dealt with there. And I've had the pleasure of driving cross-selling in siloed banks, and poured my heart and soul for many, many times to try to get people to work closely together, and found that it's very, very difficult because people have distinct areas of expertise and they're excellent at it. But so we have to change the organizational structures to serve SMEs across needs, not just, so it's.
I think we're losing you a little bit, Jason. Yeah. Okay.
Can you hear me?
You're going in and out, so I was going to move on. I don't know if there's anything you can do. Are you leaning forward into your microphone? That might be what it is.
I am. Must be a Wi-Fi blip. But can you hear me now?
Okay. All right. Okay, Lisa, do you want to read the poll results and then move us on to the next one, so we can swiftly in 8 minutes get through section 3?
Okay, so the second poll question was, what would you do most to improve long-term outcomes for SMEs? Seems the top answer is more financial education for SMEs, and then brokers evolving from transaction processors to financial advisors, and then the tech that can identify what an SME actually needs.
Okay, so it keeps on coming back to us, which is the audience clearly feel that we need more education, as well as making the products simpler, and they definitely see the case for financial advice. And because we only gave them the option for that to be brokers, they've said it's brokers, but I don't think that case has been proven yet. Can we have the next poll?
So poll question 3, what is the most important next step for the SME lending ecosystem? A cross-sector think tank bringing together lenders, brokers and trade bodies and policymakers, technology platforms that enable journey-based lending and better product matching, reform of broker incentives and commission transparency, or scaling up CDFIs and relationship lending as a serious part of the market.
Okay, so we've diagnosed the problem. We've explored some potential approaches to solving it. We've skated over the top in the mere hour that we've got. So now the hard question is, who makes this all happen? And this is a genuinely difficult, complex market. No single player can fix it alone, that's clear. It needs the whole ecosystem: policymakers, British Business Bank, wholesale funders, lenders, brokers, trade bodies, tech providers, all working together. The government clearly thinks so too. They're calling for evidence. The BBB's 5-year plan, the CDFI roadmap, the FCA's open finance tech sprint, the building blocks are all being put in place. But here's the urgency for us, I think. The motor finance redress scheme is a live example of what happens when the industry doesn't come together to fix structural problems, or is not perceived to be fixing problems that other people think we have. Claims management companies are already looking for the next target. If loan stacking, commission opacity, or poor customer outcomes in commercial lending become that target, the regulatory response will be blunt, expensive, and designed by people who don't understand the market as well as the people in this room. The window, in my view, is to act now while the government is shaping. So while the building blocks are being put in place, while the industry can still shape the outcome, is the industry, I wonder, ready to come together and to try and solve this problem? So, Paul, we've been discussing some form of think tank or forum, you and I, a closed door space where all these parties can come together. What do you think that would look like, and what do you think is needed beyond what the trade bodies already do?
Also, there's a few questions in the chat. I think I just to kind of make the point that from a commission point of view, I don't think that's inherently problematic, but I know that's something that the government is looking at. It's not commissions, it isn't the problem, it's the lack of transparency. And then because in a fragmented system, that informed borrower choice matters more than it does less, and we've seen that with the motor finance. Trade bodies, they absolutely, they're there to serve their members. That's their mandate. System redesign, that requires a space where priorities outcomes across the ecosystem. It's not representing one part of it, and I think representation and stewardship are clearly two different functions. So I think now is the time that the industry has to come together. There is inherently a problem. You can see that. I see it on a daily basis. You look, scan down LinkedIn, you can see it. The noise from government, from DBT. The lens is on this. The industry does a great job, and I think we can demonstrate that we don't need that external intervention. Whether it's a think tank, there has to be a meeting of the minds, because we've got a great opportunity. The government wants us, the UK PLC, to grow. We can provide that growth. We can provide that engine for those SMEs, and we can do it collectively. It's too fragmented at the moment, and I think we've done it before. With previous, I've certainly done that before within my role within the NACFB. We have come together as a collective. So I think we can, and I think we should. I think there has to be a meeting of the minds, and whether that's the think tank, a forum, a roundtable discussion, something has to happen. Okay, so Paul's point, Steve, is that everyone agrees the system needs to be looked at and diagnosed to see whether we have got this problem. He's suggesting that nobody really owns the problem. The trade bodies serve their members, that's their job. And perhaps what's missing is a space where the whole ecosystem comes together to design solutions that no single player can deliver alone. Would you be somebody who would come to the table, and what would make that approach worthwhile rather than just making it just another talking shop? I suppose, would it be another talking shop?
Well, to answer the last bit first, it needs to have a very, very clear frame of reference in terms of what it's trying to achieve. I think there is reason for optimism here. So after Arena, Aquis came along with Lumia, for example, and that's been a long journey, but that's an example where a commercial enterprise saw an opportunity and drove collaboration across the industry. I don't think there's any reason why it particularly has to be driven by a commercial organisation, but the prize is a big one for everybody on this call, right? So the answer is yes. I think Pete would support and go after and an initiative like that, and I'd like to think lessons from Aquis is we wouldn't be alone.
So Jason, where does the technology fit into the question, who makes it happen? Is tech a tool that enables whatever model the industry agrees on, or can it drive the change by making new models possible that haven't been available to us before?
Two parts of the question. Technology should always follow the business strategy, but it can also unlock viable business models that weren't previously available, via sort of heavily manual or human intensive processes and businesses. For example, it's very, I have a lot of these conversations with the clients I talk to, and we can help them scale up whatever the business strategy is, but it's really important to have an SME focused strategy first, and then build your technology platform to do that. And the technology can absolutely cope with cross-product lending or linking different needs together and linking the data through. That's not the hard bit. The hard bit is what is your business strategy, and what are you trying to achieve, and how are you going to stitch it all together. But as I said, there are some business models that were previously sort of, one of the challenges we've had is the old Captain Mannering model in the SME space was too. So how can technology help make that model much more viable for more people, so they can sit as a cross-product advisor for SMEs like we used to do 20 years ago? And the answer to that is yes. And some of that could be AI, or a combination of AI and expert humans who can counsel SMEs on where they need to go and what they need to help achieve whatever plans they've got for their businesses.
Okay, so I'm going to ask you all three of you, because we're 1 minute over now, what your main takeaway is from all of this. Where have you reached? What's your conclusion about what something needs to be done? What needs to be done? Whilst we do that, whilst you're thinking what your answer is, Lisa, can you tell us what the results of the poll were?
Yep. So what is the most important next step for the SME lending ecosystem? So we have two that are clear winners: technology platforms, 42.9%, and the cross-sector think tank, bringing everyone together at 40%.
So there you are, Jason. It's the tech's the answer. Okay, so I gave you your challenge. I don't know which order you want to do it. Let's start with Steve. I think, Steve, what are your thoughts on the takeaways from all this?
One, it's complicated, and two, aren't we siloed? And it's trying to break those silos down is clearly going to be key, and collaborate better across not just the asset finance product set, but also yes, as an industry. And technology's got to be opening the way up for that to be easier. So we have to explore it. We might see a few turns in the road, but that seems to me the very obvious direction of travel to try and take.
Thank you. Okay, Paul, briefly, what's your thoughts?
Well, we don't have a broken SME finance market. We have a fragmented one. Speed and innovation have absolutely improved. What hasn't kept pace is sequencing. Transparency and stewardship, it just hasn't kept pace. I think the opportunity now is not to restrict credit, but it's to design credit so that businesses are genuinely stronger 12 months later than they are today. And I think that's where the collaboration needs to come. That has to be the focus. We have to make businesses stronger. Once we touch them, they have to be stronger in 12 months' time. What we do to them today has to put them in a strong position.
That's very clear. And Jason, as the sponsor, take as long as you like again. What are your thoughts?
Too kind. As I open a bottle of wine. So I think the industry has done a fantastic job of improving the supply of funding, both in the breadth and variability of it, and in the speed and simplicity of actually accessing that finance. There's still an awful long way we can go to make the process faster, easier, and less daunting for unsavvy SMEs. But there's a lot to do there. But where we have invested painfully little as an industry is in demand. So how do we improve and explain finance to SMEs? How do we show them the purpose of it, why finance is good? You still have a little under 50% of SMEs who, as per surveys, say, I've no interest in accessing finance for in this coming year. Why is that? And we know that they fear finance. We know that I mean, certain groups of SMEs, whether it be female owner SMEs or ethnic minority SMEs, are deterred from accessing finance. What are we doing wrong? Why is that the case? So there's something about educating and focusing on the demand side that we can then plug more SMEs into the supply side.
That's great. Thank you, Jason. We've run out of time. I guess what I wanted to finish by saying is that Finance Connect is beginning to explore whether or not there would be a value in creating a forum for exactly this kind of cross-sector conversation. And if you're interested in being part of shaping what that looks like, then I'd love to hear from you, whether you're a lender, a broker, a trade body, a policymaker, a technology provider, or just somebody who thinks it's important and wants to get involved. So please get in touch. That's all from me. Thank you, Lisa, for running the panels and running the questions. We had loads. I've tried to get to a few of them, but it's too hard a task to get to everybody. Thank you to the panelists. Thank you all for your time. And don't forget to dial in on our next webcast. We'll send you email information about it as soon as we have it. Thank you very much. Good afternoon.